regular viewers of my channel, or at least people who have been watching since the start of 2024, have noticed that my portfolio updates are actually moving away from purely dividend investing, even though my channel name is XL Dividends. Now, there is a reason for this, and it has been a slow transition over this last year to move away from purely dividend investing and move towards a mixed portfolio or more towards growth. So first, I'm going to take you through what my portfolio makeup is right now. I'm going to show you how my portfolio has changed since January. Then I'm going to give you some of the reasons why I actually like dividend investing. And then finally, I'm going to give you my reasons for moving away from dividend investing. Let's get into the video. So first, let's just take a look at my portfolio currently. So my portfolio is currently £20,650. And if we take a look at this blue pie chart here, we can actually see that my portfolio is made up of 44% US stocks, 29.5% UK stocks, and 26.5% ETFs. You might notice that the portfolio is quite heavily weighted in the UK. 29.5% is quite a big weighting. I want to move that down towards more like 15 to 10%, but it has been taking a bit of time since I started my portfolio, which was originally 100% UK. You'll also notice that my ETF position is now a quarter of my portfolio, whereas you can see down in the bottom left, I've actually got a goal of making it 50% of the portfolio. Eventually, I want to make that 75% or even 85, 95%. So if we take a look at my old YouTube videos, so looking down at February 2024, my portfolio update, you can see here that my portfolio was made up of 45% UK and 55% US. Then if we move forward to March, it's 46%, 54%, roughly the same. And then we shoot all the way forward to May 2024. We can see that my portfolio was made up of 36.5% UK, 47.8% US, and 15.7% ETFs. My UK position actually has come down this year. So if we come back to the spreadsheet, my portfolio has come down from around about 45% UK stocks down to 29.5% UK stocks, and it's going to keep getting smaller and smaller. And also my ETF positions have gone up from around about 9% up until now 26.5%. The main reason I'm talking about my UK position is because the majority of my dividend paying companies are actually from the UK. Now, there are examples where I'm getting dividends from US stocks like Pepsi and Realty Income, but my main bulk of dividend paying companies, especially from the beginning of my portfolio, although I've sold out of a few now, was from the UK. So let me just show you the makeup of the dividends that I received from UK, US, and ETFs. From my UK position, 64% of my dividends in total have come from UK. 32% come from the US, and 5.6% of those dividends come from ETFs. So let's just first talk about why I actually started with dividend investing. Realistically, the way I got into investing was through dividend investing and YouTubers who specifically talked about dividend investing. This was mainly from the US. And I followed a few YouTubers that were from the UK that did dividend investing or talked about the dividends that they received. And that's how I first got into investing. It was a way for me to start investing, a way for me to put money away each month into safe companies that I knew were going to, one, were not going to reduce in their stock price significantly, and also they were going to pay a healthy dividend. These companies were the likes of GSK, Tesco, SSE, Lloyds Bank. These were the stocks that I first bought when I first started my portfolio. They paid a good dividend, and I knew that these companies were safe, reliable companies that my money would not go to zero. And it was just a good stepping stone into starting my investing journey. And also, when I first started investing, it was nice to just receive money back into my portfolio. It's a good feeling to get money paid to you just for holding the stock. And it was quite fun, especially when I first started, to be receiving the 20p or the £2.50 or the £6.80 or whatever it is into my account on a monthly or quarterly or even, bi-yearly basis. It was just a really good way for me to get into investing, safe and easy. And also I just quite enjoyed it. And then I moved away from dividend investing and I started investing in some tech stocks from the US. In October 2022, I invested in Amazon, Microsoft, and Google. I invested at a really good time just because I saw their stock prices go really, really low in that month. I had an inkling that I wanted to sell out of one of my ETFs, which was, I think it was a FTSE 100 ETF. So I sold all of that position and I reinvested all of that money, which is around like £2,800, into Google, Amazon, and Microsoft. That was my first dip into growth stocks and away from dividend investing. Now, for the reasons why I'm moving away from dividend investing. I think one of the first reasons is that dividends are usually thought of as a retirement plan. So what you can do if you have a big stock portfolio is you can just put all of your money into dividend paying companies or a dividend paying ETF, where every single month or quarterly, you'll receive a percent of the amount that you owe, usually around 3 to 4%, and you don't actually lose or have to draw down from the amount that you have invested. And because I'm still young, I'm in my 20s, I don't have to think about retirement for at least another 30 years. It's probably more beneficial for me to invest in companies that have a higher likelihood of growing or growing at a faster pace so that I can actually beat inflation or actually have a better chance of retiring slightly earlier. So to hit on that point, most good dividend paying companies are actually slow growing companies. So usually when a company hits a certain size, they don't have a lot of growth opportunities to reinvest their money into. So all of the extra cash that they hold or all of the extra cash that they make from their regular business will actually get paid out to shareholders. Now, a growth company might take all of that money and put it into R&D, return that money back into the company to then keep growing. But once a company has reached a certain size, they actually can't reinvest that money at a very good beneficial rate of return to get more growth. So it's better off for them to just return that cash to the shareholders. And in conjunction with this, their stock prices don't usually grow as fast as a tech company. So a tech company has a high likelihood of actually growing their revenue, growing their profits. So their stock price is more likely to grow. So another reason why I'm actually moving away from dividend investing is actually just diversification. So when I first started my portfolio, I invested in SSE, GSK, Tesco, and Lloyd's. So I'm hitting 4 different sectors with those. But other than those 4 companies, I didn't actually hit any high growth sectors. So I never hit tech. And I think any portfolio, even if I'm holding ETFs, still needs tech in their investments. And that was kind of the reason why I wanted to invest in other areas, is just to diversify a little bit more. If I'm just purely investing in dividend paying companies, I'm going to be hitting slower growth companies, slower growth sectors, and also I'm just going to be stuck with the UK. And I probably just needed to diversify more into other areas, other sectors, other countries like the US and like the tech sector. So it was probably a good reason for me to move away from just purely dividend investing. And the final point of why I'm moving away from dividend investing is the fact that my portfolio was way heavily overweight in the UK. And if you're from the UK or you know of the UK, you know that their stock prices don't really grow that much. Now, it's quite good for dividends. Yes, you could get a reasonable return of 3 to 5%, but you're not going to be guaranteed, or at least have a good chance of hitting 10% or more. And to weight my portfolio at 30% or more in the UK is probably just not a good idea for my own benefit. So for me to move away from the UK, I need to be investing in other areas like the US or like India, like my Indian ETF, or just a global ETF like I have in VWRL. And these things don't really pay a dividend. And to add to that point, dividends incur tax. Even though I'm investing in an ISA, if you invest into US stocks that pay you a dividend, you still have to bear a dividend tax. So if I'm wanting to invest in companies outside of the UK that pay me a dividend, I'm actually going to have to pay a dividend tax on top of that before I even receive the dividend. And that's a bit of a pain. So to maximize my money and to maximize my returns, it's probably best for me to invest in non-dividend paying companies outside of the US. And if I want to continue investing in dividend paying companies, I should keep those in the UK. So where are we at now? Like I said, I'm going to be reducing my position in dividend paying companies. And this is going to take a bit of time because I'm not just selling out of these companies. I do actually still believe in some of them, but I do think I'm better off investing in other companies in other sectors. I would still like to keep a small holding in some companies in the UK or some companies that do pay a dividend. And I don't really want to move away from receiving no dividends ever, because I do still think it's quite interesting to receive dividends every single month. And it makes my videos reasonably interesting as well. And my final point, I'm actually going to remove one of my goals from my spreadsheet, which is the £100 in monthly dividends. I'm going to just remove that goal entirely. I think when I get to my next video, I might think about adding a different goal into that position, but for now, I'm just going to remove it. That is the end of the video. What did you think? Do you think I should be moving away from dividend investing? Do you think I should be focusing on other areas? Or do you think I should just go straight all into ETFs and just forget about individual stocks altogether? Let me know down in the comments, and I will definitely give you a reply. Thank you.